Yeah, it looks like this quarter is probably the most heightened quarter of this margin compression that's going on. But now we're learning that next quarter analysts are expecting profits to deteriorate roughly 0.5 percentage point. So that could, swing either way. I do think it's still, wage growth is up 3.6%. We've got interest rates up. So that's really putting a lot of pressure on margins. And as Bob said, that's really what investors are focusing on. We need to see, once that gets behind us, perhaps we have a catalyst to move stocks higher.
Barry, with that backdrop, why do you like a name like Kroger, which you think would be very exposed to wage pressures, certainly to competitive pressures, to downward pressure potentially on prices because of Amazon and others? Why do you think they can do well in this environment?
Well, they're shifting their business. While they're adding more stores, they're also going onto the internet, and they are raising prices. One of the guys in the office went to Krogers the other day, and his piece of chicken was up 29% from $1 to $1.29. So they are able to push some of those along.
Barry, what kind of chicken is he getting for $1.29?
A piece.
Piece of
We're out here in the Midwest. You got to remember, things are cheaper out here. But anyways, we're looking at this whole earnings situation that exists right now. It's kind of like popcorn. The first ones that come out with lousy earnings, that the popcorn goes out of the pan. And also it almost gets a little stinky, like the microwave popcorn that I make, getting overcooked. But most of it's already in there, Almost all the companies are reporting higher than expected earnings, even though they're not very good earnings. So I think that we're kind of past that right now as far as the price movement in the market.
I mean, talk about power lunch. Expensive chicken, smelly popcorn. I mean, we got it all here. Jack,
He's hungry.
I want to ask you, in terms of the spike in oil prices that we're seeing today, the administration had made clear that it believed that Saudi Arabia, United Arab Emirates would pick up any sort of shortfall resulting from not granting waivers to countries who depend on Iranian oil. Do you think that this spike in oil prices is an investable one? Is it long enough to last so that the energy sector, for instance, which is up 2% today, that could stand to benefit?
I think so. We have to keep in mind now that we're no longer the largest importer of crude. In fact, we're one of the largest producers of crude, that the S&P 500 is actually positively correlated to oil prices these days. And remarkably, oil's up, at least Brent oil, last time I checked, was up 38% year to date. So I do think that these higher oil prices are sustainable at these levels. I think it also suggests that there's a little more global growth than we originally feared earlier this year. So I think the best way to play it, certainly MLPs, energy sector, but also one of the biggest beneficiaries is emerging market stocks. That's something that I think could continue to benefit if oil prices stay where they are.